The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, the Friday edition, Friday, July the 13th. Everybody says 13th. Well, not like the 13th. Born on the 13th. Not today, but the date is the 13th. So, this is fascinating, isn't it? Dow's up 144 at 12,717. S&P is up 16 and a half at 1351. Comp index is up 27 at 2893. Gold is up 26 at 1592. Silver's up 20 at 2737. Platinum's up 14. Copper is up 770 at 349.20. Crude oil is it's up $1 at 87, and bonds are down only 15-30 seconds. Days young bonds can still move a little lower. Hey, three letters. Been talking about this for a long time. When I did Tom's show last night, I spoke about it again, and I said there are two levels that I'm watching, and it's all based on the volatility index. If the volatility index, for whatever reason this morning, spikes into the 19.80-20 area, this market is going down. If it pulls back and the volatility index slides and it's able to go down to the low 18s or into the 17s, this market can move up very sharply. So, let's just check. The volatility index made a peak F at 19.51 in the 120-minute chart. This is what I show my subscribers every morning. But even more important, I spoke about this now. I can't remember if I mentioned it on Tom's show, if I mentioned it on Wednesday in my show. But I did focus on it for my subscribers to my opening call. And what I had said is, I've got a cluster pattern in the what I call my short-term trading gauge. This is called the ChapmanWave trend gauge. It's an unofficial indicator that I developed many years ago. And that, if you're looking at this chart right here, I'll circle it. If you're looking at Tiger TV, you'll see this cluster formation with very high readings, 2.62, 3.04, 2.10, 2.55. Well, the last time that there was a cluster formation like that, and before I forget, because I'm liable to forget, at 12:30 today, I'm going to do something very unusual for my subscribers. I said that I would give an update. Normally, I don't give an update, and I don't give an update I used to do it years ago, and then I found, here we are waiting, and then the Fed comes out at 2:15, and at 2:30, I'm going to give an update. Invariably, and when I say invariably, I mean an absolute majority of the time, I found that there was one time, I remember it well, we went short the DX, the Dow with the DXD, I think it was March of 2007, I don't remember what it was. Intraday, we got the exact high of the Dow spike up, and we got the DXD, and we ran it down for about 10 or 12 days. But that was so unusual. Normally what I find is that the very next day, I could put that same trade on and do it even better. So I'm not sure if I'm just going to give an update. I need to read the charts at 12 o'clock when I'm finished here. But I still will give an update to my subscribers at 12:30. And I'll explain why. Because you see this cluster pattern here in the trend. I'm circling it. You should be able to see it right over there. That was back in mid-April. 2.51, 2.42, 2.37. Look what happened. The Dow went down to 1270 and then started a rally that actually went to a peak deep top to the 13,338 high. Look what happened. The S&P went from the 1357s, and of course the trend is based, I believe, on the New York Stock Exchange. I never remember these things. I use the index so much, so often, that the peripherals kind of, actually the internals, the makeup of it sometimes just goes out of my mind, because I'm only looking at this particular indicator for exactly what I want. Well, look at the rally that went ABCD in the S&P as well, and that went to the highs of the 1415s, and that was the high back in the 1st of May, I think it was. Well, I I don't think that we're in the same situation right now, but I do believe that that's a cluster formation that has a strong impact to the upside. But I tell you what I'm looking at, and this is something else I spoke about when I subbed for Tom at 5 o'clock to 6 the last hour yesterday, when we had a couple of callers talking about the bank stocks. And what I said is, if the one tiger was already in the position of Bank of America, I said, watch the low. But if you're in it and it breaks above this, you might even want to add a trading position. And the XLF gave him specific numbers. I said, regardless of what is said, it is how the market reacts and how it reacts going into the opening at a 10:05, 10:10. That's the first hour, the first 35 to 40 minutes. That's really what you wanted to be seeing. So let me show you what I'm looking at here. And this is what I show subscribers every day. The 12,680's resistance was the 200 period exponential moving average, and the Dow 120-minute chart spiked right through it. This is leg B, but I'm changing the color. I call this gray A and gray B. Why do I call it gray? Because the yellow is usually the price that goes to peak D. This is a very unusual situation whereby it only went to C minus and failed. That's usually very negative. That usually takes you down to the bottom of the start of your range, which would be the 12,450s. But the Dow stopped yesterday right in the 12,470s, I believe it is. I'll tell you in a second right now. 12,000. Oh, I didn't type it in. I had it typed in. 12,490s. So that to me is really critical, because what's happened, this is now what I call an inside buy mode, and it's a retracement failure mode. Hey, all that it does is, today's Technical Friday is where I get a little bit more in detail with the ChapmanWave, because there are so many people that are that are actually using the ChapmanWave now, that I feel it's incumbent upon me to actually explain things, especially since we've got this fantastic medium of the Tiger TV. And you can get this, go to Mobi, you can get it anywhere you want. I've got it right. I'm actually looking at it on my cell phone so that I can see what you see, because I want you to look at it. And of course, the people in the den see actually a lot more than that. So most important is that we've got a retracement rally. All it does is explain. It doesn't say that it's bad. It's just it's an explanatory. It's a diagram of, or you can call it, it is the explanation of the price point at this particular time, and it's in relation to the highs, the previous highs or lows that are really our benchmarks to the left. That's all it is. Now look at the volatility index. It's down at 16.90, down at 143. And this rally went from 16.27 only to 1951. It took a peak A, B, C, D, E, and that requisite F that makes a very strong sell signal when it fails, and that's what it's done. And that says that as long as the trend gives me that signal with those high readings in the 2s and the 3s as their cluster formation, I have to respect that this rally might go a little bit longer. I'll explain why. If the volatility index, the simplest way that I do it is I read it as buying pressure and selling pressure. I just do not make it complicated. That buying pressure is excellent. It is right there. And you remember that the down channel, the inside track that I talk about, these two lines, the down channel, but it's at the top of the range and it's declining. Well, we're back in that and just about under it. And that's just be careful, because as long as the volatility index holds in the 16s, it is going to be buying pressure. So on the day, what would I look for? If this buying pressure is maintained through the day and bonds fall a little bit more, and the dollar pulls back, our three bears, Bondi, VIXI, and Dolly, they pull back, it says that the Dow could close in the 175 to 225, 235 area on the upside. But now, let's look at it in detail. I'd spoken about this yesterday on Tom's show. I said, let me just type this in, 12492. I'd said 12492, change the color to gray. Right there. I'd said that the 200 period exponential moving average, which is a 12,500 12,508, I think it was. Now it's at 12,512. That was the springboard for other very sharp moves. And the 9-period exponential moving average, the red line in the Dow, at 12,006. I think it was 12,683 last night. Now it's 12,696. That was the critical level to pierce, and we've done that. On my 120-minute chart, all of these charts I show my subscribers every day, and I explain them. I had said that the stochastic was turning up, the MACD had to cross positive. Look at the histogram. Histogram's moving up as well. This is the diamonds, the DIA. Now we've got a very powerful leg B to the upside. So can this go further? Well, here is the very big clue. We've got the volatility index. We've got bonds pulling back. Bonds, the TLT's down only 53 cents. But look at this. The XLF has had a fabulous move off the 200-period exponential moving average. Is this a retracement failure that's going to stop in a double top, a U-shaped pattern at the 14.85 level, the high of the 2nd of May? Well, let's see what we're looking at here. We're looking at the 120-minute chart, like the diamonds, very strong leg B. Technicals are improving. MACD's just now crossed positive, but the 120-minute chart needs the next bar to really confirm that. So far the XLF is acting very well. If you look at the weekly chart, now folks, if you're looking at my patterns and you're looking at the charts on Tiger TV, you will see that the left column, right one here, is in fact my daily chart. I have a list of about 2,000 something stocks on the left over there. The middle one is my weekly chart. So let's go to that. The XLF weekly had 3 patterns that were being challenged. And one of the things that I said yesterday, Friday, I hadn't come at 4 o'clock. But so far, I'd said, was that the MACD and the stochastic and the weekly charts were really quite poor. The MACD in the monthly chart, that's the one on the right, that's in the middle. The one on the right says, I'm holding well, and I'm treating this 9-period exponential moving average at about 1450s as very strong, a magnet, up and down like a sine wave, over and under, weaving in and out like waves. So now, it makes it really easy for me. If by Tuesday afternoon, Wednesday morning, the XLF has cleared $14.85. That's only 25 cents away. That's the high of the week of the 6th of July. That's last week. It extends leg A up, and there's a good chance that the MACD will improve, and the stochastic will go from 44% to maybe about 53%. That's an improvement. And then the patterns we're looking at is a cup formation right here, and another handle formation, but pretty deep. And the 3 patterns that were being challenged was, 1, the falling axe, those declining trend lines like an ice cream cone. The dreaded H, that H pattern that says if it cracks under last week's low of 1397, that's very bad. And then the magnet of the 200-period moving average at 16.38, plus the technicals. I'll be back and we will go through the questions in the den. I'll go through it all, and
you take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, 877-927-6648. Have a couple of callers online, have a couple of people in the den. You just heard us talking about the den. The den is just an incredible medium. Folks, during the day we talk about whatever it is. We talk about the charts and what people are saying and what they're thinking, etc. And they can see my charts during the day. If I ever, want to show a particular chart, I always show the E-minis in the morning, just as I do. Whoops, let me take some water. There we go. Okay, lift the headset away. Here we go. But I just wanted to quickly, it's just a great medium, and they can see the charts. During the breaks, I answer questions and I show charts as well. Now, this is really important. I'm going to go to everyone in a moment. I need to do this. I wanted to do it last night and completely I just ran out of time, actually. JO is the iPath Coffee ETN. Remember, ETN and ETF are two separate things completely. One is just a piece of paper. The other is with the ETN. The other is it's like a promissory note almost, and an ETF it's kind of backed by the real thing, because these whatever is in the ETF has to be bought. Now, the coffee iPath has made an Eiffel Tower. These are the patterns I talk about and I teach in my CD, Introducing the ChapmanWave. I talk about all the time. There was a beautiful left side, right side price time match to the twice hit 34.96 lows back in April of 2010 to the high peak D, ChapmanWave peak D high in May of 2011 at 81.13, came right down last month to 35.88. So it broke that low by just a few cents. Now it's having a bounce. Where's it bouncing to? Got repelled to the 200 period moving average. 47.38 would be the next level on the upside. However, what it needs to do is this weekly, the weekly chart says that this coffee contract, the way it's measured, I'm not sure it's 1 in 10 or whatever it is, the ratio. But that 35.88 has had a really strong move to the high of 3 days ago, peak D in the daily. And like sugar, I'm going to show just now, I'm going to show also the corn contract. And the reason why I want to do this, Larry Pesavento is the expert in the commodities. He has the show on Thursday, the noon till 1 o'clock show, which I've had the honor of guest hosting periodically. He just does a fantastic job because he uses Gartleys and all these things, but he knows about the grains. He talks about them. So this is, I'm just looking at the chart. Coffee said that it's gone from 35.88 to the most recent high of 46.05 on the 11th of July. It's pulled back where to? Exactly on that white line, the 9-period exponential moving average. That is really important. Why? Because in the rally that's occurred, the techniques that I use say if the 9-period exponential moving average has become the propellant, the trampoline level to spike higher, if it closes under 42.80, 42.98 is the level, but if it goes under 42.80, expect 42 to be tested, and then a rectangular trading range is formed if that weekly chart is still going to remain strong. 41.13 would be a worst case basis, but I'd say that 42, the high 42s, that's where it should hold. And most importantly, if it does that, we're looking at commodities starting to take off. That's why I wanted to show this. Look at the corn contract. It made a new high today. This is either peak G or peak C in the ChapmanWave, but it's held the 9-period exponential moving average. This is the December corn. It's making a high-level consolidation. The 120-minute chart shows that the rectangle that I've drawn in, probably making a little bit of a top here, but it could go to a fractional new high, but the range will be between 750 to maybe 751 up there to the lows of 704, and it could even go down to the low of 685. That's the rectangle, because that weekly chart is so strong and the monthly is even stronger. If you go to SBV 12, that is sugar. Look at sugar, same thing. Folks, there's something going on here that is very different. We've got interest rates at all-time zero. Remember, Japanization of our bond rates to almost 0%. And you've got the commodities starting to take off. Do they hold? From their monthly charts, some of them, this is just the beginning of a little bit of a move. And some of them, this is like sugar. This is a pretty big move. So I just wanted to go through that because I'm bound to forget. I'll look at gold and stuff like that a little later. Let's go to Rich in Orlando. Hi, Rich. How are you?
How you doing, Basil?
Very well, thank you.
Good. Actually, I'm calling you because of Bank America. We spoke actually on yesterday's program later in the day.
Yep. Okay. Are you still in the position?
Yes, I am.
Okay, great. So as long as you're in the position, we have time to talk. There's no rush to do anything. I'll be right back because Bank of America is running very nicely. It's at 7.65, up 16 cents. But we'll talk about chart patterns in a moment. Be right back with Rich and Mike straight after these breaks, and the questions in the den I'll answer.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Well, considering, I mean, TLT is down only 38 cents. Procter & Gamble is moving up. Now the bank stocks are moving higher, and the VIX is very low. This is very unusual activity when you get defensive stocks and the whole defensive area moving, acting well. At the same time, you got, in fact, for the Dow stocks, I was looking just a moment ago, there was only one that was down at that point. That was Hewlett Packard. Let's go to Rich. So, Rich, you've got your trade, Bank of America. You held on to it because it didn't take out yesterday's low. And, in fact, the news, and remember what I said to you yesterday? I said, let's forget about what the news is. Let's see what the reaction is at 5 minutes past 10. You remember?
Correct. That's right. That's right. And you had mentioned about the XLF being... if we're looking at 1455, 65, and of course it got into that area also.
Exactly right. And that started a leg A up, but it is what I call the gray leg up. In other words, until it decisively takes out the 1485 high, where it was peak D, I have to consider that this, it doesn't have to, but I have to consider that it has the potential to fail at any point, because it is retracing back to a very sharp pullback. It's like the Grand Canyon. So it's trying to get back up that slope. But it's acting extremely well right now. And of course, there must be so many people short the banks. This is part of a short squeeze. Now, if I talk about short squeeze, really, if you look at a stock like AZO, which is a stock we were short from at 385, I think it was, the last short. And that at 385, it went all the way down to 353. Well, in these very big high cap $300, $400, $500 stocks, to get 30 or 40 or 50 points to the downside is really an amazing thing, because mutual funds are there to buy it on every dip. So what happened yesterday, there was this sudden power move up, one of the strongest moves. It opened, it made a low of 366, and it shot up straight away, and it went all the way to 386. That's 20 points. That's a big move for a stock that's come down. So, and that to me was a short squeeze. But I want to try to put that into the context of what you asked me about Bank of America.
Correct.
Suddenly,
that's what I'm concerned about, right?
Right, and I'm talking about AZO, but you see, I'm trying to put the package together, because if you think about what's going on, if AZO, which is AutoZone, starts to fail here, it means that we've got to look to see if the auto companies are doing well today, because Ford has gone from the $9, and we had a caller recently, and we were looking at this, and I spoke to him, and I said the monthly chart has a low on Ford. You'll see how I'm tying this together at 905. There's a left side, right side price time match going to the failure back at 1304. Back down to this level. How it hits this level, anywhere between 912 and 898, I said, is going to be really important, because there's something wrong with this picture. If Ford and General Motors are selling so many cars, why are the stocks going to lows here? So now let me tie this whole thing together. The banks are almost in the same position. If the banks are starting to give out money for the housing sector, there's a chance that they're starting to make some money. And deep down in the underlying economics, I have to see whether or not the banks have made a strong, powerful low on that low at $13.30, and have the capacity to break above the high of last week by Tuesday afternoon, Wednesday morning of next week. Your Bank of America is in the same situation. In fact, I was talking to someone who's a vice president at Bank of America, one of their sectors, last weekend. And I said, what exactly, Joe, what do you see for Bank of America? And she said, I just don't know. She says, it's so complex, it's so big, it's so complex, I just don't know. And I said to myself, wow, that's really an interesting thing, because of all people, she's the one that should have said, this is a buy. Well, she wouldn't say that would be wrong. But she should be saying, I think it is undervalued. Well, actually, we spoke about it being undervalued historically, but we didn't know it was internally there to be able to put that picture together. So I don't want to use that. That's just anecdotal. That's no way to trade. I'm just saying it's very interesting that it's so difficult for people to put the package together to say that Bank of America really is a viable business. I think that there are still some shoes from the chart formation that I'm looking at that says, be careful with Bank of America. There are a couple of stocks that are quite a lot better. So now let's deal with your stock. Let's go to that. You're in it, and I'm going to say to you, I'm going to kind of stick to the rule I said. I said that if it takes out 769, when it went to 770, you might, if it starts to hold above that 769 area, you might want to start maybe a tiny small trading position with a much tighter stop, which will allow you to keep your core position and let Bank of America just go where it needs to go. That's number one. Number two is, I said I would not add, I would start to get out if it broke down and it took out yesterday's low. I still feel that way. If it breaks under 743, I don't want any part of Bank of America at all, especially now with this kind of news. Now, it is up 2.3%, 2.41, but it's only a $7.66 stock. Here's what I'm saying to you. You've got your position. You haven't added, right? That's the position you've got.
Correct.
I think because of the way you approached it with me and the way you said that should I add, that would be like doubling down. I'm going to be a lot more conservative. I'm going to say to you, stay with your position. What's your average cost? About 737?
Well, actually 760.
760.
My original plan on this year was when the original time it went to 820, 822, and then it backed off.
Yep.
Then it went to the 821, right under the 822, and then it backed off. I was fine with that until it kind of broke below that 748.
Right,
and
went to 740.
Got me concerned, and
Right.
that's so now I'm fidgety on this. Other than there's not a lot of volume, even on the lower side of it. I mean, I was expecting it, quite frankly, to break up and go up and beat that 821 figure. That was my target.
Exactly. So what I always say, and I do that, in fact, I just did it yesterday. I had a position in the futures, and it kind of went a little bit against me. And I said to myself, wow, this is not what I wanted. I wanted it to go up, and it went down. And I still believed it was going to go up. What I did is I went out of my position. I rethought the situation. I waited a few minutes, went right back in, because my original thinking was correct. It only went down a little bit more, a tiny little bit more, but I was very strict, and then I held it so that I made money on it. So I'm going to say to you, your original plan didn't quite work out. So I'm going to be real strict. You asked me the question, I'm going to be real strict. Stay in your position. The 200-period moving average at 770 is very strong. If by the end of the day it's able to close above $7.70, that's great action for the day. Then on Monday, what you want to see is definitively that this is going to get right into that little candle. You want to get on the 6th of July, you want to see it try to get 780. So by Tuesday afternoon, if this is not up in the 780s, but instead, Tuesday afternoon, Wednesday morning, instead it's pulling back and it's back down to maybe 750, 755, I'm going to say to you, be very strict there. You can always get back in, but 743, 742, even that is too much. I would say that if it fails here, by this afternoon or Monday morning, starts to take out 755, you don't want to go through what you went through before. Just take the trade off. You can always get back in. But so far, it's kind of working. The second bar of the 120-minute chart is starting right now. And in fact, this is the bar. By 2:20 this afternoon, you want to see this crossing $7.70. So I'm saying to you, don't overdo it. It didn't quite do what you wanted because you had a little hesitancy in your voice. It tells me that you are the person that should not be holding this. If this breaks under 740 again, I'd even say underneath, it's at 767. 748, start thinking about taking it off because it's not doing what you wanted. Okay.
Would you say 748 would be a good stop point?
So I would put on the 748. I think I would between 750 and 748. If it gets down there, it's not working with the others. It's not working well. And in your case, because you said you were a little nervous that it went below, I don't want you to get nervous again. It's not worth it. You can always find that money. You can put it somewhere else and make back 20 cents or 15 cents, but you don't want to make back when it goes down under 740 if it does that.
I appreciate that.
Thank you so much for calling. I appreciate it. Let's go to Mike in Ormond Beach. Hi, Mike. How are you?
Good morning, Basil. Basil, first of all, I want to thank you so much for saying the day and the date at the beginning of your shows. It's very important to me, and I've got a bunch of my coworkers also listening to your show, and we listen to your show mostly through the archives on our MP3 players. And it's very important to us that you say the day and date because sometimes we revert back for references to previous shows. So thank you.
Well, it's funny that you say that. I used to find that the very same thing. I wanted to go back to the archives when I was out there playing tennis or something, and I was listening on the radio to Tom O'Brien and Tim Ord. When he was interviewing him, my friend who was playing with, he said, "Well, what are you listening to? What are you doing there?" I said, "I got the earphone on. I'm listening to the show." And I used to get upset when they didn't say the name of the stock and the name of the date as well. And that's when I learned. I got that from being on the other side, listening and saying, "Hey, I want to know the stock. I want to know the name. I want to know exactly what we're looking at." And in fact, thank you for reminding me. I like to do that, and I do it because I personally like that.
Well, Basil, I'm looking at the S&P 500, and on a daily chart, from the low that we had at the beginning of June until to the high that we had at the beginning of July, I'm assuming that high was a peak D, correct?
Correct. At 137, folks, we're looking at the SPY contract. That's the S&P depository receipts. 135.40 right now, up 189, up 1.41%. Made a low at 127.14 on the 4th of June. Went to peak A at 133.53 on the 7th of June. Peak B at 134.25 on the 11th of June. Peak C at 136.25 on the 19th of June, and then pulled back, held the 200-period exponential moving average, and then zoomed up to 137.51 on the 3rd of July, and that was peak D, followed by what I call the silent doji on the right side, and it's pulled back. And what I say to subscribers is that doji that was just formed must turn into a reversal candle today. That's really important. Otherwise, it becomes a halfway marker, possibly, as the other little dojis occurred on the 6th and the 7th, 6th and the 7th of July, became halfway markers to the most recent pullback low of 132.60. So now we've started the move up, and I have to call this a gray letter A. Now, if you don't mind, I'm just going to go on just with my thought here, and then we go back to your question. This is a gray A. And that could even go gray B and even a gray C. But the moment it breaks above D, I have to put E/ whatever the letter is. Why? Because it didn't break down below the most important left side low of 130.85 on the 25th of June. And the MACD and stochastic are still holding, well, the MACD is still holding pretty well. So this is what I call that retracement mode. And I have a parallel letter. I have A, and the moment, if it goes above 137.51, whatever the letter is in gray is subordinate to the yellow letter, which becomes E/. So, sorry, let's go on.
Yeah, that was my next question. If it could possibly turn into a leg E and then a peak E.
Absolutely, it could go to a leg E/ whatever it is at that particular time with this newest one. But the predominance is that E to an F. If I'm looking at the technical, for instance, if the stochastic was instead of 51%, if it was at 78% to 83%, I'd say, you know what? I have no choice. I'm calling that E because it's still the same move to the upside. Right now, it's in the move that says that D, especially with the candle that followed it, has to be considered a pretty serious top. But the MACD hasn't got a wide. Folks, if you're looking at Tiger TV, I'm going to make this a little. I'm going to do it. I hope I remember to change it back. I'm lifting this up. You can see the fast yellow line and the red line, the fast moving average above the slow moving average. That the beta, the distance between the yellow line and the red line, if it was very wide, I would say there's very little chance of a very quick move to the upside to a new high. But it's very narrow, and it's even just almost about to cross back to positive. And that says to me, I have to consider that an E is a possibility. And why? Because the volatility index is still very low.
Okay. And something else, too. If you look at the S&P on a 2-year weekly chart.
Yep, I got that right, yep.
Mine is, I got big charts. But anyway, the stochastics on a weekly have crossed negative. So
okay, let's talk about that as soon as we get back. And we've got we've got a bunch of people waiting. We've got Gary and Lou. You know what? I'm going to do a little work on this during the break, and I'm going to come right back. We'll talk about it for a brief time, and then I'll go to the other callers. Hold on, and we've got Mike, Gary, and Lou waiting in line.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman, and we're on with Mike from Ormond Beach. We're looking at the SPYs. That's the S&P depository receipts. They're up 1.86 at 135.38. Mike, I don't know what numbers you've got, but I've got the stochastic negative only because it's at 52%, but the fast-moving average is still above the slow-moving average, but it's negative because it's under 80%, and the MACD is flattening out. It isn't really turning up today, and that's another reason why. Now, one of the things that I've got here is a very unusual technique. It's called peak C1, peak C2, which is fractionally lower, but everything else said that it should have just made that a little bit higher peak of 142.21. It went to 141.66, so 70 cents. It should have just made that for D. What I'm going to do, since it's not going to change our conversation too much, because I've got people lined up. Mike, do you mind if we continue this on Monday? We continue with the SPY Weekly?
Yeah, I'll listen to the archive because I'll be working. But,
okay,
but anyway, in a longer time frame, with the chart that I got, it looked like the stochastics turned negative, and it would kind of blend in with Larry's theory that using his Bradley model cycles that we may have increased volatility after the 18th of July.
Oh, I think so. That coincides with what I'm looking at. My monthly chart still says that I've got to think of this as a peak E with a failing stochastic and MACD. So this is a really critical month, July. So call me again. Let's talk about it, or even send me an email. But I'll show you you can see my chart if you're looking at Tiger TV. Thanks so much for calling. I appreciate that. Gary, is Gary there? Hi, Gary.
How are you, Basil?
I'm well. How are you?
I'm doing well. I just wanted to run through the TBT. It looks like it has formed a dreaded H, and I want to know how we would play the right side after if it fails.
Okay, folks, we're looking at the TBT, which is the Ultra Short Lehman 20-year T-bond fund. And just as we're doing that, I might run out of time for Lou in New Hampshire, and he's got the Russell. I just want to do this one just to show the charts in the archive, folks can see it. The Russell is in an up channel. It's holding really well. It hasn't made a new recovery high. It's made a peak D, just like these other charts. So the Russell will break down only if it takes out the low of last week, 77.59, because it'll go under the up channel. Now let's get back to the TBT. It actually all ties together. I suspect that the TBT, because the stochastic's still flat and my TLT is still really strong, the TLT is still strong, and it should make the stochastics at 90%. I think there has to be at least one more pop-up to a new high above 129.56. Try to test the recent high of the high of the 1st of June at 130.38. At that point, that could be next week. Now, this is going to be so fascinating. If the VIX remains low, what I'm looking at is there's a chance that we do get quite a sharp pullback in bonds, because my USU, that's the September bonds, have made leg D, and the leg D is underneath 152.19, 30 seconds. But it's holding the 9-period moving average, and the MACD is still good, the stochastic is good. It should actually, with this MACD stochastic so strong, it should actually have taken out 152. So I'm going to be watching this real closely. Now, your question is really, what do you do about the TBT? Should you start a position or not? You know what I'm going to suggest? I'm going to suggest, because it's at 14.83, but it is a 200%er and it moves really quickly. I'm going to say have a little patience on the TBT. If it closes nearer the high of the day today, so it's at 14.83, if it can get towards 1491 rather than closing towards 1477, I say just take a tiny little position, because this rally from the VIX index and the bank index, the XLF, says that we should still run into Tuesday or Wednesday in this up move. So I hope that helps you.
Thanks a lot.
Thank you very much. And Lou, I'm sorry we didn't get to you, but I've got this. Let's do that on Monday if you don't mind. Folks, Basil Chapman, my service is the opening call.
Are you looking for a precision edge in the market? Something that can stack the odds?